Hi everyone. Today we are talking with Kateřina Bendová. She's a financial advisor in the Czech Republic. She's helping people to improve their financial health and also guide them through the entire ecosystem of uh, finances in the Czech Republic, which is quite important. And she's working, of course, with locals, with Czech people, but also with expats. And that's one of the reasons why today we have organized this conversation. So, welcome, Katrina. How are you?
Thank you very much for inviting me to the call. I'm very good, and I was very much looking forward to the call because I really like the questions that you prepared. So I'm excited to share some knowledge and some of the story with the listeners.
Thanks for that. Thanks for the compliment with the questions. I hope also it will be helpful for people thanks to the questions. But in any case, of course, we will also um, have the chance to put your context. So if people have more questions, they can reach you out.
Sure.
um, I typically try to start the podcast conversation like remembering or kind of reflecting about
Mhm.
your story, right? First, before going into these big topics of finance and the details. So, if we can talk first, like what is the personal journey for you to become a personal advisor?
Yeah. Actually, it's a very interesting story, and I like to tell it because it's not straightforward by any means. I started in a bank when I was 18, working in an administration, and I spent 6 years there, and then with a break, another 3 years, which you could say was like a lead up to what I do right now, but it couldn't be further from the truth, to be honest, because the work was purely administrative. I didn't really get to talk to clients, and that was the part that I really didn't like. And then through the course of the time, I went into different fields as well. And I also spent 6 years teaching English to small kids from like 1 year olds till, 14-year olds and adults. And at some point, it felt like, okay, this cup was filled. It took a lot of energy and it was very nice and gave me a lot of experience. But I felt I had to move somewhere else. And at the moment, I actually got an offer to go to an insurance company, which I felt would be something like the bank. And I was like, really hesitant about that. But what actually helped me was one friend who encouraged me, and she said, well, you can take it from another point of view and you can take it as a service for the clients to find the best option for them. And that was actually a standpoint that I really liked, and it changed a lot of things for me because at the moment when I made this decision, I also worked for a nonprofit organization. We did a lot of volunteer work, and I didn't really want to go into business per se, but the idea of helping people to achieve their goals and find the best solutions sounded really good. And also the moment where I could use the skills from teaching English, A, teaching, so being able to say the things in a simple way, and B, being able to use the language. And it's just connected with working with expats who at the moment are like 80% of my clients.
Thanks for the answer of your personal journey, and so that's good to know that you were, of course, helped by some friends as well to see your strengths and that you can focus as well into this journey of helping others to reach out their goals, in this case financially. So can you tell us a bit, like at least for your experience till now, since you mentioned that 80% of your um, clients are expats at the moment. So do you have any story that it has made you proud of to be a financial advisor till now?
Actually, I'm always very happy about the feedback from the clients. And I think the most precious are the ones where the clients contact me, even without me asking, where I got a message from a client with whom we started working like 6 months prior to her sending the message. And she just felt the need or the urge to write me, hey, I just wanted to say I'm very happy about, how I manage my finances right now. And she said that she felt very proud of herself to actually starting taking care of the finance. and that it made her feel much better. And even, you can say it was a coincidence, but sometimes things like that happened, that even she got a better position at her job, she got a higher salary. And because we had already a plan ready for her, she knew how to approach it. And it wasn't this, like if you don't watch your expenses, they match your income very quickly. So the good thing was that she had a system how to organize that, and that's the one that where I feel like yes, I made it. I made somebody happier, feeling more secure in life. So probably that.
Great, great. Yeah, for now, we are not going to go so deep into the system, but I will put a pin there and we can talk about,
Sure.
yeah, your ideas into how people approach managing their expenses. But meantime, I want to know, like, if there is any specific values or frameworks that guide you in your approach to financial advisory. So is there anything that you consider important for you that it can be like a non-negotiable for you as a personal
Hmm.
finance advisor?
Hmm. Hmm. Well, I think there are like a few principles that are really guiding me at the moment. One of them is to make the things simple. Because I think the problem is not that there is not enough information out there. The problem is that there is so much information that it's very often difficult to pick which of that is really important. And also, the information that is out there is very generic. It's not focused on your life, on your personal story, on your value system. So that's one of the things to really make it simple. The second one is always to make the client part of the process. So it's not, you sign it on page number 2 and page number 10 without the client knowing what they're signing actually, but for them to have the basic understanding of the construction. That's like a non negotiable. And I always want clients to be part of that. And yeah, it's really being like as straightforward as possible and look for the best offers, because sometimes it happens that I work with several banks, several insurance companies, investment companies, and some of them may put up some incentives for recommending them more to our clients. But if there is not the value behind that, I wouldn't do the recommendation. So if I give you an example, for example, with the pension funds, which there are 9 of in the Czech Republic, there are 3 of them that in the long term are the best performing. And there is another one which is not among the top 3, who now made an incentive for if you bring clients, we will give you this and that. It's not that important who the company is and what the incentive was. But, my take on that was, well, but they don't bring the best value for the clients. So there is no meaning in recommending them to the clients. So that I would say are like the top 3. So the client is a part of the process. It has to be simple and understandable for them. And the offer should reflect the client's best interest, not mine.
Mhm. And there are any thoughts or beliefs you hold that you feel most people might not share in terms of personal finance in general? Like, I don't know, let's say, I don't know, investing from 5 years old is important, and people don't believe that, or I don't know, I'm just inventing something out of top of my
Yeah,
mind, but
I don't know if there is specifically something like that. Like in general,
Mhm.
you can see that younger people are into investing much earlier on,
Mhm.
and they already have the knowledge and they understand that the sooner they start, the faster they will get where they want to be and the easier it will get. I can also see the shift in the thinking about finance, though it's confusing for a lot of people, but they also understand that it's important. So I'm not quite sure if, there's something in particular that I would say I'm a strong believer in something, whereas others are not. So yeah, I don't think so.
Got it. It's okay. Um, so since we are talking about financial literacy as part of that journey, that you believe that young people is more aware about investment and the need to start investing or saving money,
Mhm,
or well, in general, being more having a better financial health from as
mhm.
soon as possible, right? So what are your thoughts into the gaps in financial literacy in the Czech Republic? that it can be for local people, but also for expats. So how do you
Mhm.
feel into what is
Mhm.
missing or what people is lacking to know?
I think the most important is something that we mentioned already, which is a lot of information. And the
Hmm.
information very often is too complicated. So it's put in a way that is too difficult to understand. It's like, making it a rocket science. And I'm not saying it's like not important or it's like super easy kindergarten level. But I think a lot of the things can be really simplified. And I also heard the feedback quite often from my clients where they said, oh, like after talking to you, it starts making sense. And I feel more encouraged to go into that. So that I would say is one of them. Then specifically in Czech Republic, people tend to be more conservative. On one hand, saying, pension fund is something that my mom had and my grandma, and it has this history without knowing
Hmm.
much in detail on one hand. And on the other hand, like to the other extreme, it is going into investment options that promise miraculous returns but are actually not a good choice. So it's, on one hand, really letting the money sit, and on other hand, then using the money and putting it somewhere where they lose it sooner or later. And then it actually makes them even a stronger believer of investments don't work. But it was not that investments don't work, it was just a bad choice.
Yeah, I understand is how to find that balance between
For sure.
just
For
leaving the
sure.
money in the
Yeah.
bank
Yeah. Yeah.
and be eaten by inflation maybe, and the other is to be consumed with a lot of miracle solutions that at the end they are not
Yeah.
that
Yeah.
miracle, right?
But actually, there's one more thing that I just remembered
Mhm.
that is very
Yeah.
often the like false belief, which is I have to start with, and everybody has, the amount somewhere else. Somebody says, well, once I have 10,000 every month available extra, I will start. Once I have this amount, I will start. But actually, it shows to be much more productive to start even with 500 a month. And then from there, it is easier to raise it as your life situation changes, you get a new job, you lower your expenses, whatever happens, than to wait for the perfect moment. Because as I say, like the best time to invest already was in the past. But if you have not yet, then start now. There's no reason to wait.
Exactly. Yeah, I just listened some similar quote from someone in like that they said that yeah, in the future when I have enough money, I will buy
Mm.
an apartment for renting as an investment. And then I was, of course, asking them, well, why not to start now with small investments? And yeah, although of course people get challenged with those type of questions and maybe they don't like it, but
Well, yeah,
but it's
exactly.
like
Yeah. So
yeah,
sorry, just what you mentioned is that, the buying an investment flat as the first investment goal may be something like an equivalent of somebody who doesn't do exercise at all and their first goal would be run a marathon.
yeah,
It's a goal
exactly.
that is so big that it will discourage you from the beginning because it's just too
Yeah.
much.
I understand. Yeah, so that's a good way to put it, an analogy, so that everyone can understand it. And yeah, you are helping into that simplification of the
Yeah.
of the way to explain it, right? Um, why do you think some people find these conversations so intimidating is or challenging? Is about or the way we are getting raised before, or is about that we don't have financial literacy education in our school system? Yeah, what where do you see is the problem?
I think it first starts in the family because not a lot of families really talk about finance. Very often, when you're
Mm,
a child, they tell you you're too small to talk about that. So that's one of them. And of course, it's not blaming the parents because very often the parents, themselves, they don't know and they cannot teach you something that they don't
mm,
know. So that's first part of that. Luckily, with the school system, things are changing a bit and there are more and more initiatives in the primary schools, even where people come and they give some lectures on financial literacy, so that helps. But I think also, some of the general beliefs, like money is the source of evil. A lot of people really have this thought in their mind. And if you change it a little bit and you say that the money actually just shows the character, it doesn't make the character of people bad, it just shows more of that. Because I'm a strong believer that if somebody, helps out, does volunteer work, supports nonprofit organizations, they will not turn into an evil person if they will get more money. They will have the possibility to do even more good with that. So, these are some of the things. And then when you start talking with somebody about finance, it may seem like, oh, maybe he is too well off. And then people may get envious. It's like all these beliefs that are in the back of the mind of the people. And also for a lot of people, it's like a part of their life that they really didn't take good care about till now. And there's this feeling of, oh, like, I don't really feel good about me lacking the information and not doing the things. And this will actually prevent some of people to even start because they're like, well, if I didn't start when I was 20, it doesn't matter anymore.
Understood, understood. Yeah, I personally like for example, I am originally from Venezuela, and I don't know how much do you know about Venezuela, but it's a country with a really high inflation and really bad economy and
Hmm.
under a bad regime. But um, so yeah, for example, in my case, of course, I started kind of late to invest, right? If I consider it
Hmm.
starting early, imagine if I don't know when I was having 18 years old, and I would have access to financial markets and
Mm.
internationally or something more stable, right? Maybe I would be even better off now, but I don't know. It's maybe what you mentioned is about having this growth mindset that even if you started later on life or what it can be considered later, you still have positive because okay, well, I started. I am looking to learn more and stuff like that. So
Yeah, for sure, for sure.
so I,
And there's actually one more thing, for people who have kids, because that's I'm coming back to what we started to talk about
Mhm.
with raising, the kids in the family and not talking about finance. Actually, the easiest way for kids to learn things is by observing whatever is happening. And if they will see you and you will actually make them part of, of course, like in a way that is appropriate for their age, part of the financial decisions of the family, they will take it with them. And that's actually because, usually people want to really, really support their kids. And the supporting your kids doesn't mean you have to give them the money or give them the flat, but maybe give them the right set of values and give them the knowledge. And they will do the rest already by themselves.
Mhm. Yeah, thanks for remark that. It's always good also to start even with your kids and lead by example, as you are saying,
Hmm.
right?
Yeah, that's true.
Um, So, since we are already talking about these changes that, let's say, we have already mentioned that it's better not to start with this big goal of, let's say, an
Mm.
investment apartment or having a portfolio of investment apartments, but
Mhm.
maybe start with something smaller. So, can we talk a bit about, yeah, what small changes can people make and to feel more confident and about managing their money, right? Like,
Mhm.
what is the starting point? Imagine
Mhm.
I have this conversation with a friend and they say, okay, yeah, I want to have someday I want to have this investments apartment, but currently they are not doing anything, right? Or
Mhm.
they are averse to the risk of even investing, I don't know, in some index
Yeah,
funds or something like that.
yeah,
So
yeah.
so how to start? What is your
Uh-huh.
recommendation into
Uh-huh.
this?
What I like to do always is to start with simple changes and with
Mm,
optimizing whatever people are doing already. And one thing that is super simple and works wonders is to do the things first that you usually don't have time or means for. Meaning, for a lot of people, it's, if we have some money left at the end of the month, we will put it to the savings account or we will invest it. And what I do with my clients is that we set up a standing order, a similar way how you pay your rent or whatever regular bills. You will start a standing order, but you will pay yourself. So a day or two after you receive your salary, you will automatically transfer some amount of money from your bank account, your current bank account, to your savings account, which already is a little thing. And then we do the same with other investments if we decide to work with them as well. So this is really something that's super simple and works really, really well. Because the thing is that you trick the mind a little bit. You know how it is with subscriptions for Netflix or YouTube. You forget about them after some time, right? It just automatically goes out of your account. And you can actually use the same principle with saving the money. So you will forget about it very quickly, but when you then log in into your banking, you will see that the balance on the savings account is growing. And that is something where you immediately see the results. And that's really encouraging for you. So that's one advice that I would give to everybody and that I give to every client when I talk to them. The second one would be when you have your end goal. So say, we'll not talk about apartment or maybe even apartment, and you will say, okay, I need some down payment for my apartment and the rest I will finance with mortgage. That's something that's totally achievable. It's doable. And you will know that the amount that you need for that is, let's say, 500,000 Czech crowns. So you have one information already. The second one is, when do I want this to happen? Is it in 3 years, 5 years, 10 years? So let's say it's in 5 years. So you already know how much and when. And the third one is actually figuring out what you have to do for that every month from now to get to the end goal. Because if you imagine, I need 500,000 for a down payment, it's a lot of money. But if you break it down into monthly contributions, and you will find out then 5 years, 500,000 Czech crowns would be an equivalent of about 6,000 a month. I'm just calculating from my head, so don't take me,
Yeah.
don't take my words for granted. But let's say you have this goal, and suddenly you don't have this 500,000 Czech crowns, you have 6,000 every month. And that already is much more doable.
Mm.
So
Yeah.
that would be another one that I would say. And the third one would be to not to hesitate and really find a person you can talk to. I mean, really somebody as a financial advisor, not necessarily friends. Friends, yes, if they have the results and they really can guide you, but just beware of the advices that seem to be official information and maybe they're just assumptions, but really find a person who you like. Ask around your friends. Do you have an advisor? Are you happy with them? Can you tell me something about them? And there's a lot of reviews and everything online that you can easily find and see. And one thing that I do with my clients specifically is that for the first meeting, we meet for 20 to 30 minutes online on a call. I will get to introduce myself. I will get to hear the story of my clients to see if I can really help them with what they need. And for them, I say it's like a little trailer, when you go to the cinema and you already know, oh, this is the person that will be sitting there. This is the way they speak. This is the way how they explain things. And you can decide on the call, does it make sense? And do I feel comfortable with this person? Because you really need to be very straightforward and put all the cards on the table. And for that, you need somebody that you feel trust in.
Yeah. Yeah. Thanks for sharing that and all these three advice, which were really nice. Um, Yeah, I will just focus for now in the second advice you mentioned about the big goal, let's say the 500,000
Mm-hmm.
Czech crowns that now you are visualizing as 6,000 a month that you need to save. So, what is, I would assume that the next step will be to diagnose how you can, well, if you cannot basically just go to your account and start doing transfers and maybe you don't have the 6,000 available as a spare
Mm-hmm.
income just to do it,
Mm-hmm.
then I assume the next step it would be more like evaluating, yeah, what you can reduce in some way, if
For
that's even
sure, for
possible,
sure.
or if you
Yeah.
need to switch a job or find a new income, or yeah, what are your thoughts into these steps
Exactly.
after these calculations, let's say?
Well, I have a very good example for that actually. I had a client who
Mhm.
came and she said, well, I would like to have life insurance because I feel really very uncertain since I don't have any relatives here. I have my husband here, but no, distant, like no other family members. And I would like to save something for my pension. And, she had not big goals, but, some of these. And then we looked at the income and expenses, and they were the same numbers. And we came to this, but it wasn't really the case of her having to reduce the expenses because they were very reasonable. And I don't really want clients to, when I say it in extreme, only drink green tea and eat rice to lower their expenses. It doesn't make sense. You still want to have a nice lifestyle. And what we came to in her case was because she's a self employed person. And we said, okay, it wasn't even the question of her working too little because she worked a lot. But we actually realized that she didn't price her services well, that the price level that she offered a really, really good service at was at 50% of people with similar level of experience and in the same area. So for her, the step was to keep her career, keep her clients, but adjust the pricing. And it was more of a, thought process and emotional process for her because for a lot of people, and especially I see it especially with women, they feel that they cannot ask for more and they really undervalue what they bring to the table. So we had some discussion there and it changed really like everything completely because we were able to start investing. She was able to get the life insurance that she wanted. And the next meeting that I saw her, I didn't see this tired person, but I really saw somebody who, her face was shining and she seemed really happy. And she even mentioned that she didn't realize, and after she made the change, because subconsciously she knew she didn't, price her service well, she felt much happier accepting new bookings from her clients, and she was much happier to actually go to her job. So that is one of the examples. For other people, it may be really overspending. And for a lot of people, they know that they are overspending. But because they don't really have a particular goal that would be bigger than spending the money, they don't do that. So there was another client who also had this income equals expenses. And I was very honest with him and I said, hey, Jan, I don't really see the space here for investments. I would really love to support you with that, but there's no space. And actually, he mentioned one thing, well, because I don't watch my expenses right now, because I don't really have the goal. And when we made the calculation together, and in his case, it was the retirement plan, and we came back to, okay, you need to set aside 4,000 every month. He said he will do it, and he does. So he was just missing the goal that he would have. And then for somebody else, of course, like it may be changing the job, switching the career, or also the answer can be maybe don't go for that big of an apartment. You don't have to get a 3KK to start with. Maybe you can get a 1KK. Or maybe you move the goal a little bit in the future. So the goal would not happen in 5 years, maybe it will happen in 7, which will make it possible for you again to start with lower amounts.
Mhm. Yeah, I think so. Thanks for sharing that and sharing the stories and views from different people and what are their problems,
Mhm.
right? So I think this matches a lot with the next questions I would like to make and maybe summarize it in general.
Mhm.
Like, yeah, what do you think are the most common mistakes people are doing managing their finances that can be easily avoided? I think I assume you will answer one of like, yeah, not having a goal can be one, right? Is there any
Yeah.
other that you have? Or
Well, I think it's basically not taking care of that at all. Just
Mhm.
going with the flow. So that's the, like not really being in the know. And one of the things that we also do with clients, and sometimes I do it before we meet, is that I send them a PDF form that is editable and they can actually track their expenses there. And it's really interesting, when you see the numbers, when you just take the bank account statement and you see the real numbers, they can be different than from what you thought. Maybe you will say, if I ask you like that, what are your grocery bills? And you can give me a number, and maybe when you really double check, the number will be different. So that's one of them. And the second one is that even if people plan their finance, what happens quite often is they don't plan for the one or twice a year's occasions. What I mean with that, going on holidays, they will tell me, oh, we need 40K a month for the regular bills. But somehow at the end of the year, there isn't the number on their bank account that would reflect that. And then you realize that, okay, there is the once a year family vacation that costs this and this much. There is the Christmas celebrations that cost quite some money. There are the birthday celebrations. And when you actually accumulate the money, and what I say often is, the situation when you leave the store and you feel, oh, I have just a few things in my cart and it was 1,000 Czech crowns. It doesn't make sense. And I even, for like a few times, I even went to the receipt and I was like, it doesn't really like make sense. I really had to like add the things. I was like, okay, this is 30 crowns, at 50, at 100, and I really came to this amount. And it's the same with the regular expenses, that you feel it's just 20 crowns for this, it's just 150 for this, it's just 1,000 for that. And then when you put the numbers together, it's like, wow, okay, it's much more than I thought. So that I would say is something to start with. And then, of course, as we mentioned before, not starting at all, to like not only like taking care of the finance, but even investing, putting the decisions more into future, because it's not the burning thing. It's not somebody knocking on the door and saying, hey, I need the rent. It's just my retirement. And what if, we don't know what will happen. Maybe I will die at 40 and I will not even live to retirement. Maybe I will have kids who will play NBA and they will, just finance my lifestyle because they will be rich. It's a lot of really reasons that we put there to help us not to start with what would actually benefit us.
Yeah, interesting that, well, we kind of take the decision and then put some logical answer on why not to do it, right? I think it's
Yeah,
something that
we're
we
good
all
at
do.
that. Yeah.
Yeah, yeah. Um, since you mentioned, we were been talking, of course, a lot now, and you mentioned, of course, leading by example, and in the context of having kids and couples, right? So, if I can move a little bit towards the topic of couples and their finances,
Hmm.
so I assume you have worked with them, and maybe there is Czech local couples, but also
Hmm.
mixed nationalities
Yeah, for sure.
couples. So yeah, what are your recommendations for couples like towards handling their finances together? Is there, of course, I assume it's difficult to generalize, right? But it's like, what are the key principles you consider important for
No,
a
I
couple?
have one that I would recommend to anybody,
Mm,
which is because I have when I started, to work in finance, at first I had a lot of female clients. And what I would
mm,
always recommend, whether you're married, whether you're living together as partners, have some separate investment accounts. You never want to be reliable just on one partner for two things. Once, you never know what life brings about. It may be a health thing. It may be, just some relationships fall apart. It may be whatever life brings about, but you really want to be
mm,
both of you stable enough. It may seem very, very simple, but knowing the stories and hearing from my clients, it's such a big, big thing. And very often, the big things and the important things are super simple, and we tend to overlook them because they seem obvious. So that's one of them that I would recommend for sure. The second one is very often there are couples where one of them is more adventurous, whereas the other one is more careful with their money. And like with other topics, it may actually be good to have an advisor and come both together. Like very often it happens that one of the couple comes and then he brings the partner or she brings the partner. But the advisor here can be something like what is the like mediator. basically, between the two of them. Because you don't really want
Yeah.
to fight about finance, right? It's better to have somebody, to share the thoughts together in a safe space. So that I would say is a really good decision. And with other couples, I have a couple now where the husband said, my wife trusts me 100% in finance. And whatever we discuss here together, I will tell her as well, but she really trusts my instinct. So you need to find your way, and there is really no answer that would be the same for everybody. But I would say, yeah, like be self dependent in any case. Find somebody who can really like guide the conversation between you, like an advisor that is the third party who isn't really emotionally involved in your relationship. And if you feel that one of you is really strong in that and the other one in the couple can support the couple in other areas, go for this. But always be part of it somehow. At least, have the knowledge. If we have agreements, where do we have them? What are the conditions? What are the institutions? Have access to the passwords or the paperwork, because you really, really want to be able to be in charge of that.
Got it. Yeah. Um, yeah, I remember that. Yeah, maybe we, at least with my wife, I don't have share, for example, passwords of stuff, like maybe, but thinking in really bad situations, like hopefully nothing like that happens, right? But it's maybe a good point that you're mentioning about passwords and stuff like that, because right now, well, we have plenty of services, just to mention
Mhm.
something, right? So
Mhm.
how people can figure it out? Okay, yeah, I need to access this because the person is not available. So
Yeah,
and
exactly.
it's something shared, right? So it can be
There's
interesting.
actually one more story that I can share here,
Mm.
which was a client whose husband had a big company and it really produced enough money for the whole family. So what she did was that she did things that didn't pay that well, but that she really, really enjoyed. And unfortunately, the husband died and the money was in his name.
Hmm.
And what happened was that the inheritance process took 6 to 9 months. It was somewhere on this timeline before she could actually access the money. And she said at the time that didn't he have a life insurance policy in place which paid out the money within a few days? She didn't have any idea how she would approach it because they had mortgage installments to be paid. Their kids
Got it.
attended private school, so they had to pay fees for that. They had to pay the rent, and there were other ongoing bills. So this is even, one more reason why even if it's maybe a one income household, the other person should always have access to some of the money in any
Yeah.
scenario.
Okay. Um, so thanks for sharing that. And yeah, I think life insurance can be a topic. I will also put a pin there. I think I already have pension funds and life insurance, which go next. And but meantime, what is your ideas or recommendations? I understand, of course, about managing the day to day of couples and how to work into this, but do you have any recommendations towards long-term goals and how to approach them? Like it can be even retirement plans
Mhm.
or yeah, investments together. So is there anything, routines that you consider people or couples in this case to do? Like I don't know, having a monthly meeting and talking about how is everything going into these plans or ideas. Is there
Yeah,
anything that
it
you
probably
recommend into these
depends.
habits?
Yeah,
Mhm.
yeah. Like some of the scenarios that I again saw with my clients was that one of them was the person who really is very, very organized. And he had all these Excel spreadsheets and he tracked all the financial things. So that was one of the examples that it was just one of them who
Mm.
really took care of that. And it's really not a bad thing, because usually people who are very creative are not that organized and vice versa. So it's just using your, strong skills to support the relationship. As for the pension plans, it's super easy to really set up separate agreements. I had now clients with whom we had several goals. We had goals for studies for their kid, and they each had goals for their retirement. And what we did was we had four separate agreements. So one of them was for each of them for their retirement. So it was her retirement in her name, his retirement in his name. And then for the son's studies, there was one agreement in her name for the son's studies because the son is very small, so he couldn't really sign the agreement, and one agreement in his name for the son's studies. So it's super easy to just separate it like that, and it probably makes the most sense.
Okay. Um, now, just to for now to close these topics about couples, and then maybe go to these other parts of pension funds, life insurance, and
Mhm.
savings. So, um, is there any story like or recommendations in that could be funny or not funny, I don't know, about this situation where having mixed couple from different nationalities, it can be Czech for example, in my case with Venezuelan. So how do you see this relationship because of the culture itself? Like maybe you have differences in handling finances. Is there any stories that you could share? Of course, you don't need to disclose the
Oh, I will
people for
never.
sure, but
I will never. I always tell the stories, but I never disclose
mm,
the details or the names or whatever situation that would make the clients very recognizable. I don't know if there's like stories per se, but what I always see is that coming from different backgrounds, even when it comes to the topics of, let's say, mortgage, life insurance, the different countries may have very different principles they work on. And sometimes it takes a
mm,
little time till we realize that things that are very automatic, either for me or for one of the clients, are not automatic for the other one. So, it's really coming to this common ground of this is how it works here, and maybe comparing their expectations and their experience from their home countries. But not a funny story to share, sorry.
yeah, don't worry. It was just to add a bit of humor into the stories of finances, which of course is a serious topic, but I think we also need to take this as a fun journey, because if not, it will be too boring, right? So
Oh, for sure, for sure. Yeah.
good. Now, we have been touching back and forth the topics of retirement plans, pension funds, life insurance, even saving for studies of kids or sons or family members, right? So but I know that these also come all together into the context of tax deductions in the Czech
Hmm.
Republic. So,
Hmm.
can we, before going into each of these products and advantages and so on, and disadvantages and so on, so yeah, what are the most common tax deductions available to individuals in the Czech Republic, right? Like
Hmm.
in general, if we can talk a
Yeah,
bit about those topics. Yeah.
for sure, for sure. I like this question because very often, when we compare the details of different countries and the rules, sometimes people ask, "Oh, why do they give this benefit? Because this is like too good to be true." And I always answer with, "Well, first, I didn't make the rules, and second, I think it's positive for you that you can actually save some money." And they're like, "Oh, you're right. Okay, so let's go, and talk about the details." So that's one of them that sometimes it may seem like, wow, it's too good to be true. Really, can we do that? There was one question as well in the list of questions that you sent me. So I hope you don't mind. I skip a little bit here because there
Yeah,
was
don't
also
worry.
the question, what do I have to fulfill to get the tax benefits? And the good answer is when you are a Czech tax resident, which means you pay your taxes here, you have your enterprise here, or you work here as an employee, you have the same right as a Czech person. That's important to say in terms of the tax deduction. Now, it's also good to know that it's good to think of what tax deductions to use and which not to use, because sometimes they come with rules. And that's the case of investment life insurance or life insurance in general, and of pension funds, because you can apply deductions on that. But if you would terminate the contracts before, at this moment, what the rules say is before you turn 60, you would actually have to return back the tax benefits to the state for the last 10 years. So, whatever may seem as really nice and positive at this moment, if your story is, well, I'm not sure about where I will live in the future, or I know already that, the contract here is for 5 years and then I will move to another country, don't
Yeah.
apply for tax benefits on life insurance and on pension plans. So that's one of them, to really not be only, pleasantly like surprised by the benefits, but to also know the other side of the coin, right? To flip it. So that's that. Another one that you can use is the tax deductions on mortgage interest payments. Because when you pay off mortgage, what you pay off is part of the principal, which is the original amount of the mortgage, and the other part of the payment is the interest. And what you pay on the interest as of today, up to 150,000 Czech crowns per year, is an amount by which you can lower the tax base. Which means if you earned a certain amount of money and after all the deductions, there is 1 million Czech crowns that you would have to pay tax of, and you have the mortgage where the interest payments are 150 Czech crowns, 1,000 Czech crowns, sorry, or higher, or of course lower, but 150 is the maximum. You can do 1
Yeah.
million minus 150,000, and the rest is something that will be taxed. So that's another one that you can use. And some of them are a little hidden tax benefits that don't really count as tax deductions, but they give you the possibility to save on tax somewhere. And an example of that would be money that you invest. A lot of people don't know, and sometimes it's a little hidden. When you save in the savings account and you get some interest from the bank, they actually give you the netto interest already. If they say we give you 5% on your investments, or I'm sorry, on your savings, they don't really give you 5%. They give you 5% and they take 15% of income tax off that. And you will see the netto number already. Whereas when you invest and you are an employee, there's a difference between employee and an entrepreneur. And you're an employee, what happens is that you have two situations where you don't have to pay any tax from what the money earned. Number one is the money is invested for a period that is 3 years or longer. And these 3 years, they count for every individual payment that you send into your investment fund. And the second scenario is whatever money you have invested, if you don't take out more than 100,000 Czech crowns per year, you also don't need to pay any tax on that. So that's quite an interesting one. And as of 1st of January this year, there was one new tax benefit. Sometimes they say it's a product, but it's not a product per se. It's just really a tax benefit. Because we talked about the pension funds. And the pension funds have some limits. Something is good about them, something limits you in a bit. But there is another possibility, which is when you invest through ETFs, mutual funds, you can actually deduct from your tax base an amount of up to 48,000 every year, but with the same rules as the pension fund, which means if you touch the money before you turn the age of 60, you would have to return the benefits. But the good thing is that it's really basically almost any investment that you are doing already.
Um, yeah, if may I ask into that,
Mhm.
so it's because if I understood well, like the tax benefit for investing in or putting money in pension funds and life insurance is the limit is 48,000, right? As the
That's it.
yearly expense, let's say, so that
Mhm.
is reducing your tax base on the amount of money that will be taxed, let's say.
Mhm.
um, is this you are talking about these ETF investments and so on as another 48,000, or are already inside the limit of the pension fund
There's the
and
yeah,
life
yeah, that
insurance?
that's a very, and sorry for interrupting. I'm already start always answering before you finalize, so sorry about that.
Don't worry.
Um, the 48,000 is, you could say, a budget for all three of those: life insurance,
Mhm.
pension plans, and the they call it long-term investment product.
Got it. Got it. Good. Understood. Since we have been okay now, we have clarified all the different, let's say, at least some of the tax benefits and ideas to reduce tax. Can we talk about the pension funds, for example, and yeah, what are the advantages and disadvantages of putting money in since we are talking about private pension funds, so of course, because I am this guy, or of course I am taking for granted that people is as an employee or as a self-employee or entrepreneur, they can,
Hmm.
of course, they are giving money for to the state towards social insurance, right? So that's, I am taking that for granted. And now we are talking about also about the private pension fund, which is
Hmm.
more like another service, right? And you mentioned at the beginning of our conversations that there is around 9 pension funds in the Czech Republic, but
Hmm.
you typically recommend 3 top pension funds that are giving the best results. If we can talk about those three, and also as just to close these big questions I'm making, is like, yeah, what are the advantages and maybe disadvantages of putting
Hmm.
money into the private pension funds,
Hmm.
as you
Hmm.
refer? Yeah.
Hmm. Hmm. Just remind me if I forget part of the question. I'll try to take it one by one.
No worry. Yeah.
Uh, what I always say is the private pension fund makes a lot of sense if your employer contributes into that, because it's basically extra money that they are offering you. And it would really be a pity to let it sit on the table. That's number one. Number two is, if you are not 120% sure, ask your payroll or your HR if you have that benefit. Because I already saw it with a few clients that they could actually apply for the benefit, but they didn't know or they forgot. Or sometimes they said, well, we thought we are coming for 2 years, so we didn't want to bother. And now we are in year number 6 and we still didn't apply. So that's that. The benefits, or on the other side, the not so positive things about that, it's good to know how it works. We mentioned there are 9 plans, 9 pension companies in the market. In the long term, the best results are shown with the pension fund of Česká spořitelna,
Mm.
of CSOB, and of Consec Investment Company. So they are the top 3 in the long term. Now, each of the funds that are in the market has by law to offer at least 3 different alternatives or 3 different investment funds, from conservative, overbalanced, to dynamic. And the
Yeah.
suitability depends on how long you want to use the fund. If you feel, okay, I'm staying for 3 years and I just want to get the benefits from my employer, the answer to which one to choose will be different than if you say, well, this is really for my pension and I plan to leave the money there till the age of 60. So that's that. Um, and what all comes in? What you're doing here, first of all, the difference between the social security payments and this one is that social security payments, you're basically contributing somewhere where money of all the people are put together. Whereas this one is specifically your own fund. So this is something like your own bank account, let's say. Now, what happens there is that your employer will send some contributions. Let's take the example with the employer sending contributions. You will send some contributions because sometimes employer says, hey, we will contribute double of whatever you do, with the cap at 2000. So in that case, why not send 1000 if it's in your in your options, if it really meets the possibilities of your budget. And the third one who can but doesn't have to contribute money is the state. Because the state actually is saying, hey, the social security doesn't really give you that much money that you might need in the future. So we want to support you getting ready for your future. And that's why at the moment, because the changes have been done in July this year, if you're contributing anywhere between 500 Czech crowns to 1700 Czech crowns yourself in a month, the state will add 20% on top of that. So if it's 500, state will add 100. If it's 1700 on the other hand, or on the other way, it's the 340 on the other side of this scope. Whatever in between is 20% always. And the state says, I will give you this contribution, but I really, really want you to use the money for your pension, which means that, again, we're coming to the age of 60. If you touch the money before you turn 60, we will withdraw the contributions back again. It's not a penalty, really. The money is sitting in your account, but they will just withdraw it back. So that can be one of the maybe disadvantages. The other one is that whatever you earn, the yield on your investments, because the money is invested by the chosen strategy, is subject to 15% income tax. So there isn't this rule of 3 years no tax. So that's the second one. And the third one is really low flexibility of that, because you cannot do partial withdrawals. You cannot say, I just need 20,000, 50,000, whatever the amount may be. You can either discontinue the fund altogether or just keep going with that.
Got it. Yeah, thanks for sharing all the information. And in the context of pension funds, also not only for adults like us, which wants to have the retirement, but as coming back to the idea of couples and their kids. So, what is your recommendation into this process of private pension funds for kids? Is this I know you mentioned in one of your examples that someone was saving for the studies of his son. Is this the same, or it was a separate fund? So how do you, yeah, in summary, my question is, what are your recommendations towards managing private pension funds for kids, and how do you approach it? Because I assume it have maybe also different rules as well, because if you are starting with a kid from, I don't know, investing into this from their first, or they're being born, let's say, so of course, yeah, waiting for 60 years maybe is too much.
Oh, yeah, it
So
is.
yeah, how do you
Yeah.
feel? Yeah,
And also, you have no idea what will happen with the rules in 60 years. You have no
exactly.
guarantee that it will stay the same, right? So, what is maybe important to understand is that the fact that it's called a pension fund does not mean that it's the only way how to invest towards your pension. It's only one of the options. Because I
Yeah,
often see
exactly.
with clients that they're like, oh, but the pension fund. And then I say, well, you can actually invest through other ways as well. It just doesn't have the label of pension fund and doesn't come
Yeah,
with the state
exactly.
support. But you really have so many options. So for kids, as you mentioned, 60 years or even 55 or 40 or whatever, it's just such a long time that really use the benefit of being able to choose completely the structure of your investments. Have the benefit of having this tax-free yield after 3 years. Have the benefit of being able to be much more flexible with the investments and just go with your own choice of mutual funds, of ETFs, of index funds. And just give it the label, just give it the label yourself. This is my pension savings. This is my pension investments. You don't need an approval for that to it being called the way it is.
Exactly. Yeah, it's a good reminder that it's common sense, but yeah, it's maybe we forgot too much because of all these labels as you're mentioning. Yeah,
Yeah.
good. Um, Now, so since we have, let's say, around 10 to 15 minutes more of conversation, I will move to another topic, since I
Sure.
think it's really interesting to cover different topics before we close. So yeah, can we do the same exercise for life insurance? So what are the benefits of investing in life insurance from your point of view, and how
Mm.
to handle it? Because I know, yeah, yeah, you can mention, I don't want to make more comments, so it's maybe, yeah, what do you see as benefits
Mm.
and disadvantages of having life insurance?
Uh-huh. Okay. Well, first of all, that's one topic that you touched here is that there are two types of life insurance. Life insurance that
Mm,
only covers the risk. So that means, if
mm,
I die, this will happen with the money. If I am ill, this will happen and the money will come to my account. And the second one is an investment life insurance, where you actually have the risk and the investments joined together. The second one is not really that much recommended because it's a product that combines two products together, and very often things that are both together, like a washer and a dryer together, or a shampoo with a conditioner together. They're good for
mm,
some occasions, but for everyday usage, no. So I would really recommend, unless it's your your employer contributing money into investment life insurance, then it's the same story as with the pension fund. Take it. But if you consider it yourself, just take it for whatever it is. So insurance is meant to cover the risks. And in terms of financial planning, it is actually meant to cover the difference between your active income, when you work, everything is okay, and between the lowered income due to some health inconvenience. And what we actually do by the life insurance is that for somebody, it may be even a psychological safety thing. Like I mentioned, this client who wanted to have the life insurance just to feel safer. But actually, this is exactly what it's doing. It is protecting whatever else you are building. Because let's say that you're investing, you don't really have your parents that could support you with some amount of money. You don't have the savings in the savings account that are big enough, and a health issue appears in your life. What will happen if you don't have the insurance? You will have to touch your investments, which then again will lead to you not being able to meet the other goals that you had. So basically, the insurance is here to give us a strong base that we can build up on with the other goals. So that's the meaning behind that. The good thing about life insurance that I really like is the very, very big flexibility. There are no two agreements that are the same. And sometimes people ask me, oh, how much does a life insurance cost? And I never really give them the answer because, I start asking more questions. It's okay, what kind of events do you want to be insured against? What would be the sum that you want to be insured against? How old are you? Do you have any previous health issues in your life? Because this all will have an effect on that. But you can change the agreement as you go. And I also have clients who said, well, we have this much in the budget, and these are the biggest of our worries. And we started with death insurance, and we added insurance for serious illnesses like cancer or similar, because there was diseases like that ran in the family. And of course, the person was worried, yeah, there is a possibility that it might happen to me. And then as the time goes and as your situation changes, you can update the agreement. You can add risks. You can even lower them when you see my financial situation at the moment is so much different from the one where I started, that I don't really need this anymore because I have the security net already.
mm. Yeah, that sounds amazing. It's a good opportunity for people to have it, of course, if you can handle it in your budget as well, right? So that's
Sure.
important to know. Um, Now, if we go and talk more about investment itself, right? We have talked about pension funds, life insurance as this foundation.
Mm-hmm.
Now, what about the if you want to reach out more income, or having this,
Mm-hmm.
let's call it passive income in the future, in the long
Mm-hmm.
term, if it so, what are the most common products in the Czech Republic for investments? Talking about
Mm-hmm.
maybe ETF or other
Mm-hmm.
funds. So,
Mm-hmm. Mm-hmm. Well, the good news here is that since everything is that international and we are all connected with internet and everything, you
yeah.
have pretty much very, very similar choices here or in Germany or in America or somewhere in Asia. So the good thing is that you can really have a lot of variety here. What I always talk about are the key principles, because I think when you understand the key principles, we don't need to talk about specific products, but you just
Mhm.
have that in mind, right? And I give a
Exactly.
few examples that we all remember very well because it was part of our life very recently, or some of them still are part of our life. The first one that I mentioned and that we all remember was COVID. Now, what happened during COVID? There was a lot of changes in our everyday life, and there were some parts of some industries that performed really, really, really well. Would you guess which ones they were? The ones that performed really well.
Um, which products perform the best, you mean?
The industries, like during when COVID was
Mhm.
around, which companies were really performing still good?
The ones which are the basic needs, maybe like food,
Yeah.
um,
Uh-huh.
I don't know, some uh, regular monthly supplies that you need
Sure.
for
Sure.
an
Sure.
office to
Uh-huh.
run. Let's well, maybe not an office, but because the office were run, but more
Uh-huh.
like yeah, stuff that maybe you need in your household every month, right?
Uh-huh.
Maybe
Uh-huh.
that could be
Yeah.
that.
Yeah. That's one of them for sure. And then you mentioned that people were not in the office. So what happened
Mm,
was they didn't stop working. They just worked from home. And what they needed for
yeah.
that was a lot of internet appliances. Or even companies like Netflix, they skyrocketed. They were very happy during COVID.
Mm,
Or other IT companies. The healthcare was performing well. And on the other hand, we all know that we couldn't travel. So travel industry, hotels, restaurants, they didn't perform that well, which leads us to the first rule, which is diversify. Don't have all the eggs in one basket, but have a bit of everything. The second one is this is by the industries. The second one, the way how to diversify is by region, which again, we all know that the war between Russia and Ukraine is still happening. And I have a client who bought a flat in Ukraine 3 months before the war started. It was not a good news for her, and I'm not sure if she bought it on mortgage or with her own money, but in any case, it wasn't good news. So that leads you again to not be dependent on just one country, or maybe even just one continent, right? Because you never know. So that's another one. And even another one would be to have some of the money that is very stable. Maybe it doesn't perform that much, but it's stable and it's always around, like the savings account or the bank account. Then you can have investments that perform a little better but are still rather stable. And these again help you for short term goals, or they also help you in unexpected situations where you need to reach into your funds. And the third category would be investments that are more volatile, like stocks, ETFs, index funds, which again, the volatility you could say is on the negative side. But what is on the positive side is the fact that they have the potential to earn more. So when you have enough time for that, you can allow for these kinds of investments. Because if you have a 20-year plan and 1 year doesn't go so well, you have still 19 other years to go. So that would be something to consider when you want to invest, and that already brings you to the answer, which is okay. If it's a long-term goal, I can use ETFs or index funds. Usually they work pretty well for well-established markets, like for example S&P 500. Perfect. You don't really need to have an actively managed fund for that. On the other hand, if you have a very specific market, let's say market of companies that deal with water distribution, with cleansing, or other areas, or maybe even the European market is still rather developing, there very often it helps to have an actively managed fund when there is a person who's called a portfolio manager who says this is good for us, this is not, and who picks from the market. And when we talk about the more conservative ones, then you can talk about bond funds. Bond is basically a loan that you as a person give to a company, very simply put. So that would be a more conservative one, or quite a favorite one in the Czech Republic are property funds. And how they work, they're very, very, very similar to you having an investment property, but you can invest much less. You can invest as little as 500 Czech crowns per month or 10,000 on a bulk investment. And you can share the profit of the company that comes from the rent, that comes from making new purchases into the fund and then selling it for more, and that comes from the rising price of the properties. So that would be maybe the simple way how to cover this topic.
Yeah, thanks for commenting and having this big picture approach with the principles that you need to remember, and then you can apply them to the specific products or fonts that people want to select, which I assume is also depending on the people's approach, what they like. If they are more into, well, I like to check real estate, or I like more the concept of real estate as an investment,
Mhm.
so maybe they approach it in that way instead of a stock or an index, right? So
For sure.
it's also important to remember into that. Yeah.
Hmm.
Um, since we are closing for today, sadly, because I think we can talk about this topic for a long time, I
Oh yes, we,
assume.
we we could, and I think we should maybe do like a volume 2 thing. Yeah.
Yeah, that is possible. If you are open for that, of
Oh
course, we
sure,
can do
sure.
it as
Yeah.
well.
Anytime, because
um,
like the one thing, I'm sorry to just like drop
yeah,
a sentence here, is that my goal was really to reach as much people as possible for them to have the knowledge. Because I said,
mhm.
even like with my Instagram, which by the way is asleep a little bit, I should work much more on that. But there were some things, and I have like 3 A4s full of topics that I want to talk about. Um, but my goal here was not to necessarily only do it for potential clients, but to make a source of information that is easily accessible, that is very simply put. So that I think is also something that we can actually achieve with this podcast, to spread the information out there.
Of course, yeah, that's the goal, to have valuable content that people can use it even after listening to this podcast. Because
Hmm.
even the first advice you have of having the standing order, I think is something we all can do with a few minutes or a few seconds,
Exactly.
even
Yeah,
depending on the
yeah.
tool and
That's
so on.
that. Uh-huh.
Yeah, so now, and as a follow up of this idea, I know that of course you may have some resources that you have used for yourself as well to
Hmm.
learn more about these topics. So can you share some of them? It can be a book, it can be another podcast or
Hmm.
event that you visit, or
Hmm.
communities as well that
Hmm. Hmm.
other like-minded people like you are visiting, and then
Hmm.
people can join to those communities or events, and
Hmm.
so on, right? So
Hmm.
can you
Okay.
share a bit of those resources if you have some of them?
Sure, sure. When it comes to the books, I have 2 tips here in mind. One of them is the
Hmm.
one that everybody has heard about already, which is The Rich Dad Poor Dad, which is a really, really nice book from Robert Kiyosaki. The good thing is that it also has a alternative that is suitable for kids. So it has, it's like a comic, about animals who want to raise some money, and they do the things. It's really, really nice and gives some ideas. And one on the budgeting that I particularly liked, because I really like books that are based on some stories, not necessarily like true events, but they're really not theory, but a story. The book is called The Four Laws of Financial Prosperity, and the author is Blaine Harris and Charles Kunrat. It's quite a small book, really, and it tells a story about a family who didn't really have that much money, but they had a really, really rich neighbor. And they thought, instead of reaching out to the bank, we should reach out to the neighbor and she will lend us the money and we'll be fine. And she actually leads them through the process of budgeting, because she says, well, I will not lend you the money now, because with the current habits that you have, it wouldn't really help your situation in the long term. But I will guide you through a process. And if you go through that, And after we finish this, you still need my help. I will help you. And it's a really beautiful book because the couple has kids as well, so they also involve the kids in the process. And I think you can take a lot of inspiration from there, even about how to talk about the things with your kids. So that's on the books. Then on the other ones, it would be more of like a random podcasts and a lot of, training that are job related from colleagues that speak a similar way, that speak very simple. And I know they have the experience. So that's another source of information. Of course, there are a lot of podcasts there. Maybe one thing that I would just mention here is that a lot of videos on YouTube and podcasts are directed on American market. And the one big difference there is that the tax laws are very different. So they are not applicable for the European market. Just be careful with that because, it's a really very, very different set of information. So that's this. And other sources, actually, I arranged or I didn't arrange, I was invited to do a workshop for expat ladies. It was 2 years ago with 30 ladies, and we had a workshop on investments, which was really great. I really loved it so much. And we talked about the basic principles, basically to take the fears off, because when you have enough information of something, you suddenly, stop worrying so much. So that was a really good one that I really enjoyed, and the information that we could share there were really valuable. So yeah, that's probably that. And then the other one is look for somebody who you like their approach, you like the way how they speak. Because of course, I might give you a recommendation for something that you don't really find interesting. Because maybe you'll say, oh, the person is too slow, too fast, too excited, too boring, whatever. Just find your person.
Yeah, yeah. Thanks for sharing those resources. And there's comments of finding the right person for you as well. Um, is there anything that we haven't talked today that maybe with one more minute you want to remark, or even if you already mentioned it before, like, is there any final thoughts that you want to leave people remember, or a reflection? Hey, this is the way to go.
I would want to give out 2 tips
Mm,
on how to
okay.
talk about finance with kids, because I think this is the
Okay.
one that is really very practical. One is if you have small kids and there are these scenes, when you go to the supermarket and they're crying after the chocolate or whatever it may be. I think even like as 4-year-olds, let's say, you can easily start with pocket money with them. But the good thing is to start with coins. Because imagine the kid has 50 crowns per week or whatever the amount may be. And you give him 5, 10 crown coins. They don't understand the value of money, but they understand that of the 5 pieces, if they buy this chocolate, they will only have 3 left. And this is a very easy way how to teach them and also how to minimize the tantrums, to be honest. Because if you tell them, well, you can buy it with your own money, sometimes the kid says, oh, you know what, maybe I keep my coins. And this is a really, really nice way. And when it's older kids, let's say 10 years and older, maybe even younger, but you know your kids the best, right? Try an experiment with them. Give them an amount of money and let them shop for the weekend or let them shop for the day. It's important or interesting from 2 sides. One is, even though you might be surprised, they will not buy only chocolate and sweets. They will be aware that, yeah, we cannot eat only that. And the second one is that they will actually realize very practically what the value of the money is. Because they will see, this is how much I got in my hand, this is how much I have in the shopping cart, and they will have the comparison. And maybe one last that I heard from somebody, and I really like the idea. There was a girl who said that even when she got pocket money from her parents, they wouldn't give her the full amount. They actually applied already the principle of taxes and of similar payments. And let's say that she got 100 of whatever currency it was, euro, and they would put 25% of that. She would actually pay into the household. There was like kind of a tax for the common expenses that they have. Other 25 euros were meant for her to put into her savings account or other way of saving, maybe even the pig bank or whatever. And the other 50 was something that she got to spend in whatever way she liked. And what she mentioned was that once she started working, and she saw this before tax and after tax numbers in her payslip, she wasn't surprised because she was like, well, this is like at home. I know already what taxes
Got it.
work like. So I really, really liked this.
Yeah, thanks for sharing these three tips. It's really useful and for kids to and parents for sure to apply them.
Hmm.
So, well, Katerina, since this is the time we have till now, but I
Hmm.
think, of course, I will welcome your suggestions for another podcast later on, and we can talk about specific topics a bit
Hmm.
more deeper. So that could be nice, and we can talk about that. But meantime, if someone wants to work with you or get to know more about your story or any piece of advice for your, let's
Hmm.
say, calls that you are offering as well, so how can people reach you out? So what is the best way to for them to
Well, probably
connect?
the easiest that is the same all the time is the web page, which is
Hmm.
my name, katerinabendova.cz. You will probably put it
Oh,
somewhere in the link, right?
yeah.
The second one, if I give you the Instagram name, it will actually make me be more active on it because it will be like, oh, they are expecting new information, which is katerina.finance. So
Okay.
that's the second one. And there they can actually find the phone number, email address, and all the details that they need to.
Okay. So again, thank you very much for your time today. It was a pleasure. And yeah, hopefully everything was helpful for people listening to us and that they can improve their financial health as much as possible. Right?
Sure. Thank you for having me. It was really nice.
Thank you and see you.
See you. Bye.